Thanks for that. We'll come to that. But before that, let's just understand the global backdrop. A risk-on rally appears to have begun from mid-October. We have Arvind Sanger, Managing Partner, Geosphere Capital Management, joining us all the way from the US. Thank you very much, Arvind, as always, for staying up for us. A very happy Diwali to you. I assume you are still celebrating it over there. There is Diwali in the equity markets all over. Do you think this kind of a rally has legs? Call it bear market rally, call it start of a bull run, but it has legs, you think?
Yes, I think you were, first of all, thank you for the Diwali wishes. Hope everybody there had a great Diwali. And yes, this bull market has legs because, there's that old saying, when the cat is away, the mice will play. And as I think you earlier highlighted, there is no data that can upset the apple cart meaningfully between now and, this first Fed meeting, 75 basis points in November, early November is given. But after that, I think, for the December meeting, people can live in hope. But the other thing that has happened is that the earnings season started off strong for the US, but now you're seeing some significant market leaders like Google, Alphabet, and you had Microsoft disappoint slightly. And you have, tomorrow, US time, you have Amazon coming. Meta was a big disappointment. So we have to keep an eye on that, whether that upsets the bull market or that's just that it takes the tech market leadership away from tech and other sectors do better. I think I'm more inclined to believe the latter than the former. But I think the real issue is, where is inflation going and how quickly is it coming off? And I think that's an open question. None of us knows the answer, but for the short term, I think the bull market has legs because the hope is that inflation is going to show signs of moderation.
Okay, the bull market has legs. You've been saying this for a while, Arvind, and the Indian markets are, less than 4% away from their 52-week highs. Is this still a good time to be putting money to work in India, or has one missed the bus?
I think selectively there are still stocks that are lagging. I mean, obviously we've talked in the past about the Indian IT names. Those have lagged a lot, but that's not necessarily where I would be putting money to work. The bank stocks have obviously had big moves, but I think there are still selective opportunities in the banking space because they're not from a valuation standpoint. If this is a long-term sustained earnings and growth cycle in India that has several years to go, which I think it does, then banks are certainly not at valuations, at least some of them, where we can say that they're already fully priced all the good news. So therefore, I look at valuations rather than indices to see where individual stocks are, and I think there are individual pockets where valuations certainly are not at anywhere near the kinds of levels that you would say that the bull market is running out of legs.
Okay, all right. Hi, Arvind. Good morning. Arvind, I wanted to ask you, Lata was just putting out some data that maybe the Fed doesn't do 275 basis points hikes. And that was something that the street was factoring in, say, a couple of weeks back. What's your sense? In 2022, whatever's left, do we get 150 or do you think 125 basis points is more likely? And also just wanted to confirm, I remember the last time you joined and you were telling us that this is likely to be a relief rally in a bear market. Now, you think that's slowly trending towards a bullish market?
So let me take the first question first. Look, the Fed has already raised rates 3 times 75 basis points and is about to do a 4th 75 basis points move. That's the fastest ever speed of increase in terms of how quickly they've gone up rates. So therefore, it is not, completely, out of the question or unreasonable for them to do only 50 basis points. It sounds like a big relief. But that means that they've done, 475 basis points, that's 350 basis points in 5 meetings is pretty dramatic. And I do think that it makes sense for the Fed at some point to start going a little slower just to see, because the effect of their rate increases always comes with a lag. It's not instantaneous. So then it comes to your second question, is this the start of a bull market or a bear market rally? The reason I still believe that there's a pretty good chance that this is a bear market rally, although, they are probably more fun than bull markets because bull markets go more gradually. Bear market rallies are much more rapid. But the reason I still think this is a bear market rally is because I do believe that the impact of all these rate increases will come in 2023 in terms of economic slowdown and probably a recession. And I don't think that inflation is going to be quite as fleeting and as easily licked as the bulls would hope for. Because, oil is 95. I think it's headed past 100 again, especially if China starts to, at some point in 23, take off the foot off its, zero COVID strategy. So all of those factors give us a little more caution that I do not think we can get past this inflation event without meaningful pain to the US and global economies, which means a recession, which means the market will probably retest its lows from earlier a few months ago.
Well, Arvind, as a last question, let me request you to develop that point. Sundar Pichai, among the other things he said about Alphabet, he also said that cloud-related earnings are not much. Now, Indian IT companies have been betting on their investment in cloud, and that, is going to give them earnings for the next few quarters, even if fresh orders slow down. They have so much of backlog. Are you getting a fear that even Indian IT companies may start hiring less? And that can have a compounding impact on consumption. So is there any won't buy stocks in India?
I think if the Indian IT companies do feel some of the effect, because the tech companies in the US are clearly feeling, impact of slower ad sales and just slower, revenue growth. And therefore that is going to feed through into, some, but there is a secular trend. Look, there will be cyclical short-term headwinds. It's not the end of any cycle, but it's just clearly cyclical headwinds for the tech companies. But, the digitization mega theme is alive. Yeah. But I think within that mega theme, there is clearly headwinds. And therefore, I think that'll have some impact on IT companies in India. But I'm not sure if that derails the entire Indian cycle, because it's no longer IT alone that is leading it.
All right, Arvind, we'll leave it at that. Thanks a lot for joining in. Have a great week ahead. And once again, happy Diwali to you.